So often we get obsessed with the day-to-day price of crypto, but today we're going to do something a little different. We're going to look under the hood at the actual structure of the market. We're going to peel back the layers and look at an engine that is seriously starting to roar.
And look, let's just get right to the point. If there's only one thing you take away from this entire explainer, it's this idea right here. The dollars moving around on blockchains, well, they're not just for crypto trading anymore, not by a long shot. They're becoming a real, fundamental piece of the actual financial system. And the main place where all this settles, well, that's what we're here to figure out.
So we're going to build this case in 4 simple parts. First, we'll dive into the pretty shocking numbers behind Circle's recent growth. Then, we'll map out where all these on-chain dollars are actually flowing. After that, we'll look at the proof that Wall Street is all in on this. And finally, we'll tie it all together and see what this could mean for Ethereum's future.
All right, let's get into it. The recent numbers from Circle, the company behind USDC, weren't just good news. No, this was something else. This was a signal of a fundamental change in scale, a total change in weight class.
First up, revenue. A jump of 77% year over year. I mean, come on, we're talking $770 million. For any company, that kind of growth is a huge deal.
But here's where it gets really nuts. This isn't just some passive income thing. The actual usage of their product, we're talking transaction volume on the blockchain, it exploded by 247% in Q4 alone. That tells you this money isn't just parked, it's moving, it's working, it's being used.
And the grand finale? A 412% increase in adjusted EBITDA. And you know what that means, right? Profitability. This isn't just growth for growth's sake. They've built an incredibly profitable, sustainable business. It's a real money-making machine.
So let's just step back and look at the whole picture. Revenue, profit, the amount of USDC out there, and especially that transaction volume. Every single metric is pointing to a system that's just operating on a different level now. We're talking about nearly $12 trillion in volume in a single quarter.
So, where's all this cash coming from? Well, yeah, the huge chunk, $733 million, is interest from their reserves. But that little slice, the services part, that's the one to watch. It shows they're not just sitting on a pile of bonds, they're actively building a real payments network. They want to be way more than just a treasury management company.
Okay, so we've seen the what, this massive boom. The next question has to be where. Where is all this actually happening? Where are these 75 billion on-chain dollars actually living? And more importantly, what does that tell us about Ethereum?
And this chart just lays it out perfectly. Look, USDC is definitely a multi-chain asset, there's no doubt about it. But there is an undeniable center of gravity. The overwhelming majority, about $53 billion worth, sits on Ethereum. Then you have its layer 2s like Arbitrum and Base holding another $10 billion. Solana is a big and growing hub for sure. But Ethereum is clearly home base.
And this brings us to a really critical idea, especially for big financial players, the ultimate settlement layer. You see, it's not just about speed. It's about where huge amounts of money can be finalized with absolute certainty, security, and trust. For Wall Street, this isn't a nice-to-have. It's everything.
So you can almost picture it like this. All the fast, high-volume stuff, the payments, the trading, that happens on these feeder networks like Solana and the L2s. They're built for speed and efficiency. But when it's time to lock it all in, the value, the final record of truth, it all anchors back to Ethereum. So in a weird way, these other networks help the ecosystem grow, but they end up driving even more value and demand right back to Ethereum's mainnet.
Now, what's so cool about this is that it's not just some crypto-native theory. The biggest financial players in the world are literally confirming this structure, not with their words, but with their actions. Because let's be real, when you're talking about firms that manage trillions of dollars, the most powerful endorsement isn't some fancy quote from a CEO at a conference.
No, it's the infrastructure they actually choose to build on. And BlackRock, the biggest asset manager on the planet, made their choice loud and clear. They launched their very first tokenized fund, BUIDL, directly on Ethereum.
This wasn't just some little weekend project, okay? The BUIDL fund blew past $1 billion in assets almost immediately. This is $1 billion vote of confidence in Ethereum as a legitimate, viable operating system for the future of finance. And this really highlights the key difference in how these institutions see the major networks. For them, Bitcoin is an asset you hold. It's digital gold, a store of value. Ethereum, on the other hand, is an infrastructure you operate on.
It's for doing complex things like issuing financial products, transferring them, distributing dividends. It's a completely different and, frankly, much more integrated use case.
So we have this incredible foundation, right? A booming on-chain dollar economy that settles on Ethereum, which is now being validated by Wall Street. So with all that in place, let's look at how these trends could structurally lead to a much, much higher valuation for the network.
You can really boil the roadmap down to 3 key pillars. First, stablecoins. Just keep expanding beyond trading into things like global payments. Second, asset tokenization. All the real-world stuff moving onto the blockchain. And third, you've got the network's own economics, where all this growth increases demand for ETH itself, while its supply is actually shrinking.
And the potential scale here is just mind-boggling. I mean, sure, the projections are all over the place, but the direction is crystal clear, up. We're not talking about small gains here. You've got firms like McKinsey and Boston Consulting Group saying the tokenized asset market could be worth trillions, maybe even tens of trillions of dollars by 2030. These are numbers that don't just change an industry, they reshape global finance.
So why would this massive market choose Ethereum? Well, because when you're tokenizing real financial assets, you need exactly what we've been talking about this whole time. Rock-solid security that's been proven for years, some level of familiarity for regulators, and that guarantee of trusted final settlement. BlackRock's choice already showed us the way. Ethereum is the front-runner for this new financial plumbing.
So, let's just tie it all up with a bow. The signal? Circle's insane growth, which proves on-chain dollars are a real major financial force. The hub for all that activity? Ethereum, without a doubt. The endorsement? It came from BlackRock, who voted with $1 billion of their clients' money. And the future? Well, it's a world where these twin engines, stablecoins and tokenization, create this incredible structural demand for the Ethereum network.
You see, all the pieces are now on the board. The data really suggests that the global financial system is getting a massive plumbing upgrade. And right now, Ethereum is positioned to be the core of that new infrastructure. The engine isn't just a blueprint anymore. It's been built and it's been tested. So the only real question left is, how fast is this thing going to run?